there's always this friction, right, between the investor and the founding team.
That's correct.
And I've also heard people say vulture capital
Yeah.
for VC. I would imagine that it's like the Karan Johar School of College where you're partying and you're freaking out or whatever.
I wish.
And then students come here and choose to do more work. Only feel I'm good at math now after 20 years because I'm helping my daughter with her school maths.
As a founder, 100% of your eggs are in one basket. In terms of time, in terms of wealth. As an investor.
Hi, this is Amrut. We are at IIT Madras, my alma mater, and India's top university for people who like to build. We are here to meet some builders, ask them, what are you building? What does it take to build? And what makes IIT Madras the best place to build? Hello and welcome to the Best Place to Build podcast. Today I'm sitting with Kaushik Anand, who was a student here from 2006 to 2010. He's currently a partner at A91 Partners. It is a late stage VC firm, so I hope to learn a lot about how VC and investing works. Plus, when he was a student here, he had 2 startups, and in his postgrad also he had 2 startups. So a lifetime builder, you could say. And hi, welcome to the show.
Hi, Amrut.
Can I ask, there's a lot to talk about and I have this huge list of things to talk to you about. But can I just start with some basic understanding of what is investing, what is VC, what is PE? I think you are one of the first guests from this segment, from this sector.
Sure.
Give us an overview.
So let's maybe start with where do people get the money? Because most things, as you would realize, flows back to where you get the money. So typically any institutional investor, which is a VC firm, a growth equity firm like what we call ourselves, a private equity firm, gets money from a set of people who are called limited partners. If it's a small firm, these could be high net worth individuals in India. If it's a large firm, it typically is institutional investors, which are mostly in the US or in the West. These are endowments, pension funds, very large family offices in the West. So this is where you get your money. You invest the money which they give you along with a little bit of your own money into a set of companies, and then you take a share of the profits before returning the money back to them.
So you are talking about where a VC gets its money
That's
from.
correct.
Okay.
That's correct.
So it's not their own money.
Most of it is not their own money.
Okay.
Right? And then what happens is, basis the stage of investor you are, you invest into a certain number of companies. And the reason I mentioned this stage is that if you are an early stage investor where you're investing in things which are of highest risk, you want to spread out a little bit more. So typically you would see a seed stage fund have like 50 companies, 60 companies in a fund. Whereas if you go all the way into late stage private equity, they may only have 6-8 companies in a fund.
Okay.
And then they would invest the money and they generate returns. So let's say they put in 100 rupees. When they sell their shares, they make a certain profit. If it is a profitable investment.
Okay.
They keep a share of the profit and then pass the profit back to their investors.
Okay.
Right? I think that's the setup of how any institutional investor works. Now then it depends on sort of what stage of investing you are in, what types of sectors you invest in, and so on.
Okay, so an institutional investor is someone who is raising money from people with more money.
Yeah.
And then would invest in certain kind of companies depending on what their
mandate is.
Okay. And can you give me a list of different kinds of institutional investors?
Sure. I think we'll just go across the spectrum. Let's say one end of the spectrum is angel investors who come in maybe when there's just a team and a presentation. At the other extreme is, let's say, a company going to the public bourses. So let's say these are the 2 extremes in terms of what you have. Typically, companies would raise an angel check, which is from individuals they know or individuals well known in the industry. Then they may go to a seed stage fund, which is a small fund investing very early on in a company. Then you would hear these funny terms called Series A, B, C, goes all the way till maybe Z. So there are different types of firms which would operate at different ends of the spectrum. There's private equity, which also is there towards the late stage of the spectrum. But we'll just come to that a bit later. Typically, most of these investors I spoke about are backing entrepreneurs to go build companies. And basis the stage they come in, they're called by different names. It could be an angel investor, it could be a seed investor, it could be an early stage venture investor, which is Series A, could be a growth equity investor like where we come in, which is typically more at the Series C stage, and so on.
Okay, great. I would imagine that first of all, there may be like totally how many VC firms in India? Maybe in the hundreds?
Possibly, yeah, I don't know, but yeah, low hundreds.
So that's not a lot of people, right? That's like
right.
maybe totally employing about 5,000 people max.
That's right.
How?
Not even 5,000. I mean, typically they are even smaller shops.
Okay,
Yeah.
fine. So if there was a conference of all VCs,
It'll probably be around 1,000 folks. Yeah.
Yeah, okay. So that's interesting. So I have two questions. One is, obviously these 1,000 folks are creating a huge impact, right? How would you explain the impact that VC firms and PE firms,
Sure.
or not, you said leave PE for later. So how does the impact of, how do we all as normal people
Sure.
feel the impact of VC firms?
I think the simplest way is if you look at the products, services, employers you intersect with on a daily basis today, you're typically interacting with companies backed by venture investors pretty much on a daily basis. So let's take Swiggy, companies, Funny is from here, and any other product services you use, it's typically had some kind of venture backing. The easiest way to understand the impact is to go back 30, 40 years. Typically, the only people or mostly the only people who could start companies were those who had some access to money. This would have either been because they're part of a conglomerate, they're part of a business family where they had access to money to get going. So early on in most companies, you end up losing money and you need somebody to finance the gap. Banks don't provide you loans at that early stage of your business. So you need somebody to go take that risk. And that's typically what venture investing is about, saying when you are not self-sustaining, you're back to go create something. So, basis the stage, there are different kinds of risks people take, but that's sort of the role of venture investors. When I used to be at Sequoia, for example, there was this quote saying 20% of Nasdaq's market cap were Sequoia-backed companies. These were companies like Apple and Google and so on. And this was just one firm. So if you take the US lens towards different venture capital firms, this number was probably well north of 20%. I don't have the number in India because venture-backed companies are just about going public. You would have heard a number of companies go now, but it'll probably eventually get there.
That's fair. I graduated from here in 2008 and I started my first company in 2009.
Yeah.
And I didn't know about venture funding. So in my mind, it was like, मेरे बैग में इतना पैसा है, so इतने पैसे से क्या खोल सकता हूँ? Like literally,
of course,
what can I start with how much I have? Right?
Sure.
And you are saying that what venture capital does is allows you to access a different kind of business that requires more capital.
That's correct.
Yeah, fair enough. I mean, my parents were teachers and professors, so there's no way that they would have backed something that was bigger than. My first business was a library. So.
Yeah.
Okay, thank you so much. I think when we were speaking about it earlier, and you also mentioned Sequoia, and you were working at Sequoia, I think Sequoia was one of the first VCs in the, let's say, in the modern VC era, right? How did this kind of funding start, and how has it moved to India, and why has it moved to India, I would like?
Sure. I mean, the history, I may be a bit off, but I think the origins of this was somewhere in Silicon Valley where a group of people from Fairchild Semiconductor stepped out and then created firms. I don't even know if they were thinking of creating firms. They were just backing people with crazy ideas with some money. I think that's pretty much how it started. How did it move to India? I think as the economy opened up, people felt that there was an opportunity that there will be companies of similar scale and size getting built out of India. Initially, these companies were maybe a bit more export-led. So this would be IT services, exporting pharma and so on, where money was going in. Until India became maybe wealthy enough for companies which are domestic-facing to come in. The initial wave of venture capital firms were US firms setting up an India offshoot, like Sequoia, right? Or a Lightspeed, or a Matrix Partners, or Axel, and so on. And then that's then led to a second generation which have maybe been more homegrown firms like ours. right? I think that's sort of how the evolution has been. Yeah.
Fantastic. So, over the world, it's a 50-year-old kind of, maybe a 70, 80-year-old kind
Probably,
of
yeah.
business. Starting with the 50s, you mentioned Fairchild, and I think the founders left and started Intel and all these other big companies. They also started VC firms. And in India, it's like maybe a 20-year-old business for companies that came in from outside, maybe a 10-year-old business for companies that are homegrown.
That's correct.
So you were in IIT from 2006
to 10.
to 10. So how was your time at IIT? What were your choices then? And how were you looking at campus life?
No, I had a pretty interesting and unique experience. I think I pretty much did whatever was available on campus, whether it was sports, whether it was get involved in campus politics, get involved in Sarang, do some technical stuff in the form of what we tried with a couple of these ideas. So just tried to do as much as possible. I was also quite academic, right? So while I would not claim to be a good engineer, I think as you know, it reflects that and the GPA typically are not correlated, but I was quite academic. The original idea was to go for a master's or a PhD in the US. Like I think most folks thought about it at that point. So to test it out, I went for an internship to the University of British Columbia under a program called My Tax. We were the first batch which went there. I think it's a bit more popular now. That 3 months was very interesting. So I enjoyed the time spent in UBC, enjoyed doing it. But when I sat back and thought about whether I can do this for 5-6 years if you're going for a PhD, I felt it was a very clear no. And the reason for it was that it was very individualistic, lonely. In a 3-month internship, it's interesting because they paid you and you were sort of going around the country, but that's not like, I mean, that was not the crux of why I was there.
Right.
And so I felt that I did not want to do that for 5 years. So I came back here. I was not fully sure of what to do. When you're not sure of what to do, you're looking at what other people are doing. People were writing CAT, so I wrote CAT. But before the results of that came in, I got into McKinsey, which came in for campus placements here. And that was an interesting place to be because their entire pitch was that we'll be more like a finishing school, which is that if you don't know what to do, this is a great place to spend some time because you'll look at different businesses and then you can figure out what you want to do. Actually, I missed one step in the journey. We had tried a couple of campus startups when at IIT. And
it's a very important step.
Yeah, it's an important step which I missed. But I think we did not do that we did not know what venture capital is. We did not know a company even maybe has to make money. Even terms like revenue, EBITDA were probably, I think, were not known. One of them, in fact, was with Srinath, who is now the founder of Zetwork, which has created a very large business. But we had started it very much as saying there is a interesting technical problem. There are some competitions out there where if you solve this, you may get a prize. Why don't we start this and try? I think that is the origin of it. But in hindsight, when you think about it, they made no financial sense.
I want to just suggest that in 2006 to 10 period,
yeah,
you've tried everything which is, academics. I've written it down here. Academics, sports, politics, Sarang. I've made a circle. We'll come back to it later. And now you're saying that you are also starting up. But the thing that's changed from then to here is that I don't know how many people in your batch would have started up in campus. But right now it's huge. Like, there are a bunch of campus startups.
No, it's non-existent. I would not even go as far as to call what we tried as a startup because we never really even incorporated a company, right? The origins of this, I don't think there was anything started in that time from campus. I know Tarun and these guys at Aether were doing something actually out of C5, but I don't know even if they had a view saying that they were going to build a two-wheeler company or anything of that notion then.
This is their Sterling engineer.
Yeah, exactly. So, I think we had initially started because at that point there used to be these competitions and contests where they said you have to come with these interesting startup ideas or not even, it was not called startup. Come solve an interesting technical problem and you may win a prize and maybe then you can use this money to start, right? That was sort of the origin of this. So, the first thing we tried was this idea which we called it as Graminavetas. Where we said, why can't we use different sources of locally generated power instead of depending on the grid? Actually, the idea came up from Srinath of now Zetwork because he, I think on his NSO days had gone to this place called Natham, which is a village outside Chennai. And he said, like, why can't we try this here? So we said, why don't we try this here? And then we go try this out. And then we won this thing called the GE Edison Challenge. And then you win, and then you think through, I mean, I don't know how much money they're given, but they're given a little bit of money, maybe a few lakh rupees. But it was not really something which was like, oh, you can sell to the grid, you can make money, none of that. There was no business idea around it, right? So there was, oh, this was interesting technically, but can something come out of it? Probably not. You'd just be going out asking people for donations, and that was not something which interested all of us.
I'm really fascinated with this idea that students come here and especially after JE, which is a rigorous period in their lives, they spend a lot of time away from home, or even if at home, then many hours at a desk, and they come here and, you know, I would imagine that it's like the Karan Johar School of College where you're partying and you're freaking out or whatever.
I wish.
And then students come here and choose to do more work willingly. And, you know, obviously, running a project which might become a startup is a lot of work.
Sure.
Right? So what motivated you and why do people do that? Like, it's confusing.
No, I think the interesting thing here is that there was freedom to go try whatever you wanted to try. So I came here, it was pretty clear to me maybe within the first semester that I'm not going to be a great chemical engineer. That was not my calling. So then you're just trying different things to figure out what do you like and what would you be good at. The good thing about the place is that whatever you wanted to try, there was no constraints on what you could do, not do. You could work all through the night if you wanted. So I wanted to see if I wanted to do research, you could go do this internship, figure it out. I wanted to sort of see if I was good at sport, you could go do some of that. And then this stuff, right, where you just said that, okay, maybe there's some way to make a little bit of money because there's this contest running. This technical problem is interesting. Why not try it and see if you're good at it? I think that's sort of the origin of where it all started. And the other interesting bit is whatever you wanted to try, there were people more talented than you in anything you wanted to do. Right? Which is you come in thinking I'm very good at math, you realize that, oh, I'm actually like may not even be in the top 50 here, right? And or you come in thinking I'm very good at a certain sport, which I thought I was very good at tennis, you realize that, oh, there are these 5 guys who are like so much better than me. So that's sort of the motivating factor to go try different things and work with people who are better than you to go do something.
Because you picked math.
Yeah.
I did think I was very good at math in school, and then at IIT, obviously, same experience. You suddenly feel like...
Oh, that's an interesting anecdote on it, right? I think the first math and physics 101 exams I wrote, and I came in saying I'm super good at this is why I've cleared JE. I think I scored something like 2 or 3 on 20.
Yeah.
And there were people scoring 20 on 20, right? Yeah. So it was pretty clear that, okay, maybe this is not what you're like really good at.
Yeah. It sort of flattens your ego completely.
Absolutely.
I only feel like I'm good at math now.
And it was not even...
One second,
yeah.
I only feel I'm good at math now after 20 years because I'm helping my daughter with her school maths. And I'm like, wait, I know this.
No, it was not even about math or physics or anything technical, right? You think you're a good quizzer and then you realize that, okay, I'm not even at the top 20% here.
Yeah.
So it's actually like about things even outside of academics.
Fair enough. And then you said you wanted to join McKinsey. You said it felt like a finishing school kind of place. Is that the lure of consultancies? I mean, it's still very big on campus. People want to join consultancies, the Bain, MBB, I think.
Yeah. No, I think there were a few motivations. It pays well. I think it had the most accelerated career trajectory as a generalist at least. Because if you see the people I overlapped with and I spent less than 2 years at McKinsey, if you see the people I overlapped with there, it has been quite diverse. Like when e-commerce happened, a bunch of these CEOs ended up coming out of McKinsey or consulting. It's similar in venture capital and private equity where a bunch of folks in this industry are actually ex-consulting. So it just felt like very talented people were there and whatever took off, people were able to jump into it, which then gave you a pretty strong network across the board, right? I think so spending the 2 years did make sense, at least for me. The interesting bit of that was that while I joined McKinsey, like they just opened their Chennai office at that point. And so maybe 6 months or 9 months into it, I moved here as maybe the first or second like business analyst here. So even that office was maybe sub 10 people. So even that was interesting because even that was like quite entrepreneurial, saying that you're only like a handful of people here, which is not typical in McKinsey. It's typically
Correct.
a big organization.
You would have to hustle it out
That's correct.
because you don't have access to the full power of McKinsey.
That's correct.
How would, but then you left McKinsey, right? You left to join.
That's correct. So what was happening then was that, I was talking about these couple of things we had tried in IIT. Felt like, hey, you can't do anything, even if it's technology linked, if you know nothing about business. And it may be as simple as these terms you would hear saying, oh, what is your EBITDA? And you're like, what is this thing? Right? So even simple stuff like that, but maybe a little bit more complicated in saying that how do you go from a product to a company? It's not like a linear step. And so you felt that being exposed a little bit to business would be helpful. I was spending time in McKinsey at that point, but that was the early stages of internet or anything around technology, venture capital taking off in India. I mean, to give you a sense of the timelines, 2010 to 12 was when barely anybody here had heard of Flipkart. They were not recruiting here. I think they may have just raised their Series A.
Yeah.
Right. So it was very, very early, but I was quite intrigued by it. So I started looking around saying, without starting up, where can you go where you can sort of see these things in action? So late stage private equity didn't give access to this. Consulting, of course, while you were working on helping companies, you were working with large companies, not like small companies.
Yeah, I remember that. I think Chennai McKinsey was working with Hindu, which is like
correct.
100-plus-year-old company.
Correct. So companies like this, right? Large financial services, large media companies, and so on. So at that point, venture capital seemed like an interesting way. There was at least one senior from IIT who I had pretty much traced his path for a long time, who was my school senior. He went to McKinsey, then he had joined Sequoia. So that was the first time I heard of what this was. And then I spoke to him and then sort of felt, okay, this made sense. At that point, I think they were the only ones recruiting folks in the pre-MBA sort of level, right, as analysts. And then thought it made sense. You would get some kind of an inside view on what is going on. And then ended up joining it. I had a fantastic 2.5 years there because you could see all these early things in action. Young founders similar to me sort of come in and say that I have some idea, some sense of a product, how does it become something else? And then you could sort of learn through other people.
Must have been really exciting also, right? At that time when venture capital, also the first big IPOs hadn't happened. So you were all trying to prove yourself and whether venture funding will work in India, whether this model that has been proven in the Silicon Valley and elsewhere in the world will work in India, whether...
I think the first large IPOs actually happened like in around 2019-20. So it's been like quite recent in terms of large venture outcomes in India.
Your journey so far has been from IIT to McKinsey to Sequoia and then you moved to larger VC firms, right? I think in the middle you went to do your MBA.
That's correct.
And again you had campus startups.
Yeah, so MBA was interesting because when I went to the US, to Harvard, you realize that actually there was a fair bit of time. So the idea was like, why not try some stuff?
Is it? I thought HBS is like really hard and their case studies and...
it does take a bit of time. I would not say it's a breeze, but you figure out that you devote a certain amount of time and then you had time to do other things. Now you can pick what you wanted to do. But I think the thing I thought was interesting. So interestingly, I worked throughout my 2 years at HBS. I never really took a true break in that sense. The first year we tried a couple of things. One on something around classifieds. Second is a company called Clever Layover, which is still live, though it's not a big thing. And then realized that again, these were not going to make it big. So then in my first year itself, like I got a full-time offer to run Google Capital's India office. So I actually worked through my second year while at business school. I ended up working throughout my second year. We made investments actually into Indian companies like Freshworks and Cardeco and so on while I was still on campus. And then spent some time with them in the US and India before sort of A91 happened.
Nice. So you were at Google Capital as I think I met you during that period.
Yeah.
It was and Google Capital. I don't know what they're investing in now, but the ones that you spoke about were really made the news.
That's correct. So they're not like as active in India anymore.
Okay, so can you give me an idea of what your current role is and how does it work? Also, I had some time to look up the investments that you've been involved in through your career, and there's a bunch of tech things, there are a bunch of non-tech things. So I want to discuss that too.
Sure.
But I think the better context will be if you can just tell us what a partner does.
Sure. So, I mean, at A91, we invest in a number of sectors, including technology. So, you'd see a bunch of consumer brands there, you would see a bunch of financial services companies there, of course, software companies and so on. I spend a lot of my time on software, tech services, and a little bit of financial services is where I spend most of my time on. And different partners focus typically on different sectors. So, my colleagues do some of the other sectors we spoke about.
I mean, we discussed it a little bit in the leading conversation. Is it true that the investments that are happening today are more in tech, or has the needle moved from consumer to tech?
You're asking A91 specifically, or
A91, but in general also.
See, I think specifically as a growth equity firm, you're investing like into 15 companies in every fund. So you don't go in with a view saying this many investments have to go in a certain sector.
Okay.
You're sort of looking at what makes sense at that point in time. But if you go to, actually this is an interesting segue into understanding how different stages of investing work. If you go into very early stage investing, you're looking for exponential outcomes, where things can get very big in a 5-6 year time frame. Where obviously technology companies, given that if it works, it takes off very quickly, you would see the activity be very heavily loaded towards technology.
Whereas an example of a firm like that?
Let's say Sequoia itself or Accel or any early stage fund, you would see the mix of technology companies being a lot higher. While if you see the IPO markets as the other end of the spectrum, there will be a fair mix of different companies, and tech companies will be a fraction of that market, because you'll see all kinds of companies. You'll see some infrastructure companies, you'll see some financial services companies, you'll see some technology companies. So the pace of growth and the outcome size needed to justify why the fund exists is very different at different stages. So in a very early stage fund, you're saying, let me make 50-60 investments. If one or two of these make it, my fund is made. Whereas as you go later, the rewards are smaller, hence the risk you can take is also a little bit lower, which is where some of these other sectors come into the mix. Right. But having said that, in India, given where our per capita GDP is, there's still a lot of opportunity even in traditional industries, in building consumer brands, in building just lending companies, insurance companies, pharmaceutical companies. We are not like the US, where these things are already built out by the time venture capital arrived. So, different stages of investors can help bridge the funding gap even in sectors which are considered a bit more traditional.
You're saying because our GDP is rising?
See, we are at around maybe somewhere between $2,500 to $3,000 of per capita GDP, where disposable income is just starting to show up in the hands of consumers. So even in simple stuff like what you consume, like what we consumed when we were students versus what students these days consume in terms of even food, I'm sure has like gone up in terms of available options. So similarly in other categories as well, I think the number of options will continue to go up, and somebody has to come build these things.
Right. And a lot of services that were earlier maybe unbranded or unorganized will become.
That's correct.
Organized.
That's correct.
Right. So from your point of view, it's not a very tech versus non-tech thing. There's opportunity everywhere.
I mean, exactly. If we can make a certain degree of returns with the level of risk we are looking for, we are agnostic to which sector it is in.
Yeah, fair enough. Maybe because we are sitting in IIT Madras and we are sitting in this lab where there's a lot of tech and you feel like there's a tech bias, but it's not really like that.
I mean, for us, I would not say we are biased towards one sector, but if you go towards early stage investors, you would see a large tech bias because of the pace of growth and potential outcomes it can generate.
Understood. Fantastic. I think I parked a few things to talk about later. One is PE. I think early on you said something about PE and then said, I'll explain it later. So what is your PE?
No, I think the reason I kept it aside for later is that typically private equity also has a connotation with controlling and buying companies. So in all of these other stages of investing I spoke about, people are backing a founder to go build a company. private equity typically has the notion that they are going to buy the company and put their own people to run this business. So it is generally more common in very late stage companies where they're saying, I want to sell the business. So instead of selling to a strategic owner, you end up selling it to a private equity buyer. So apart from what stage they come in, there's a little bit of a structural difference also on why that exists.
But this is when an investor comes in and sort of, there's always this friction, right, between the investor and the founding team.
That's correct.
And I've also heard people say vulture capital
Yeah.
for VC. What is the genesis of this and when does this happen? Why does this happen?
Sure.
I mean, I guess in the media you hear the worst stories because they make good storytelling.
I mean, there are a few reasons. Of course, there will be bad actors in any industry. So let's keep that out because then it's very clear why you hear these kind of stories. But even in people looking to do the right thing, there are certain conflicts of interest which exist between investors and founders. Even with the best of intentions. I'm not talking about any bad intentions from any party here. Because you have to realize two things, right? Because the structure of what I explained in terms of where the money comes from, any institutional investor has a clock to exit. So as a founder, assume that you can build something over 25 years. But as an investor, typically there is a 10-year fund, which means you have to return the capital by the time the fund is over. So while during most of the time you're sort of saying, you're aligned in terms of saying, let's build something big, let's build something in the right direction. As an investor, you have a little bit more finite time than what a founder has.
Right.
It also shows up in the second thing which I wanted to talk about, which is that as a founder, 100% of your eggs are in one basket. In terms of time, in terms of wealth, everything is sort of in one company. As an investor, even in a late stage investor, you have a handful of companies or 15 companies in there. As an early stage investor, you have like maybe 50 companies in a fund.
Yeah.
So because they want one company or a few companies to shine, what ends up happening is that they are not looking for the middling outcomes. So you would hear this term saying go big or go home, which is you either want things to succeed fast or fail fast. But if you're a founder, you don't want things to fail at all.
At all, yeah.
Right? So you don't want to fail fast. You're saying I want to increase odds of success versus saying that I want to go big or go home. But especially earlier you are in the investing as an investment fund. If you're a small fund coming in very early, you want one or two things to really become big.
Yeah.
So that could be another source of tension and friction.
This is a very interesting point for me because as a builder or as somebody who has started a business, you started a business because you like to build, you like the craftsmanship, you want to make something of your hand, you want a robot to move or a code to do some fantastic new thing that nobody has ever done. And then you build a business and then for a while, that makes a lot of sense. But after a while, it's less about the craftsmanship, but more about making it to scale and sort of making the whole thing work.
That's correct. And I think if you have other founders who come on the podcast, I think they would sort of be able to explain a bit better from the other side on how different investors at different stages sort of think through what sort of pressures they went through.
Yeah, the founder side of the story will be much more dramatic.
Of course.
Right.
And while I said most founders, and I mean, there are few bad actors, most founders would have probably encountered one bad actor. And so you would hear like all sides of the story.
Yeah, fair enough. This thing that I just dipping in a little bit more on the core versus non-core kind of things.
Yes.
From when you were on campus and you were starting a core project, I guess, tech project.
That's correct.
To now, there seems to be a lot more of those coming out. I understand that it's not all of the market or it's not a hugely disproportionate thing, but what has enabled that to happen?
I think part of it is just venture funding itself, especially when you go into more deep tech or hardware companies. The gestation period is a lot longer, which is, and many of these companies have been built out of IIT Madras.
Yeah.
And so you realize that it takes maybe 6-7 years to even get going. Because unlike a mobile app where you can fire it up and then you see if it works or not and you can sort of fix things on the fly, it's tougher in deep tech companies, whether you're a space company, you're a hardware company. It takes a longer time to get going, but in that time you need to hire people.
Yeah.
You need to pay them somehow.
Yeah.
And so some of the bridging of this gap happens through early stage venture capital, where people are coming in saying, let me take the risk and put it behind you.
Yeah.
The other reason I think it has happened is that people are able to see examples of success. Sitting where we were in 2006 to 10, there were no examples of success or anybody doing anything like this.
Yeah.
Right. Today, for somebody starting out here saying, hey, Ether came out of here, maybe Agnikul is getting built out of here, and the plethora of other companies getting built out of here, gives you some notion of, hey, you can succeed.
Yeah.
It gives you some people you can talk to when you're stuck on anything. It could be a financing challenge, it could be a technical problem. It gives you more people and an ecosystem to talk to, which then suddenly starts to build more companies in these segments.
Yeah, some momentum has been built
That's
up.
correct. Like, I think when we were trying stuff, we didn't even know who to talk to, because you can't always go to your professor on something like this. I mean, they will be able to help you if it's purely a technical problem.
Yeah.
But even at that point, if it gone saying like, I don't have money, I don't think there was an answer.
Maybe also at the time, I don't know whether it's a universal experience, but I also felt that my professors were a little anti-company, anti-job. They were a little more towards, let's do research, let's publish papers.
That's correct. I'm sure that exists always in an academic campus, because I think their goal is to build better researchers, not to build companies, but I think the mix is getting found now.
Yeah. There are professors today who are amazing founders.
That's correct.
In
fact, we have one in our portfolio who's an IIT Madras alum, but an IIT Bombay professor who started this company called Sedamac, which we've funded it, and it's recently, a couple of years ago, and it's just going listing. It's a fairly deep tech company in the true sense of the word.
This is great. I think I want to go back to those three things that I've pointed out. I mean, thank you for sharing so much. Firstly, I want to say that I know that VCs do come on podcasts quite a bit,
Yeah.
but they are quite reserved about how they present their sector. So, thank you for sharing so much. I want to go back to these three things that I've circled, saying we'll come back to it, which is sports, politics, and Sarang.
Okay.
And this is of your time at IIT, right? And yeah, please start wherever. Sports. Let's start at sports.
Yeah, I mean, so my background into getting into IIT itself was a bit unique, because all through my childhood I ended up playing a lot of tennis. It was a very popular sport in Chennai at that point.
Because of the Chennai ATP tournament.
ATP tournament, but there was this academy called the Britannia Amrut Academy. Leander Pace actually came out of here. And pretty much I think maybe 7 out of the top 10 players or something were sort of here, right? So that was a pretty popular sport. I ended up playing it in school pretty much all through. And then there was, I was ranked quite well for my age category at that time, until I played one game where I got thrashed so badly. And this was actually in the Nungambakam Stadium where the Chennai ATP used to happen. The semi-final where I vividly remember that I lost so badly that I realized that it's not just about effort, right? It's like you just don't have the skill to make it. This was, I think, around 10th grade when shifted focus and said, now you have to make it through JEE. That seemed like the only other sort of path to some kind of success. So got into IIT, and in my first year of IIT, got into this, I think it was called NSO or the sports thing at that point. Ended up playing tennis very intensely again, and ended up having a stress fracture in my back. And it was unfortunate, because then that meant that next 3-4 years I could not play tennis. But it also fortunate in some ways, because it forced me to move hostels. So I was in this hostel called Alaknanda. Had friends there, but then because of this like sort of physical disability for a temporary period where I could not squat, and this hostel, funnily enough, didn't have a western closet at that point in time, I had to move to a new hostel called Tamraparni, which we used to call as Thambi. It was a new hostel which a set of BTechs who were the only sort of folks there. And suddenly I moved into a group of people who were just so high achieving, and that just ended up pulling you into everything around campus, right? So campus politics, it's not like I contested an election, but my friends contested. So you started getting involved. Or Sarang, because I never thought about it, but I ended up being a core for publicity and ticket sales. Because these peers were involved, they sort of pulled you in, and then you got involved in more things than maybe even what I was interested in at that point. So it gave you a hand to dabble at pretty much everything around on campus at that point.
Very interesting. Thambi, you were the first?
First, and I think the only BTechs at that point. I don't know if they've had BTech. I think we were the only group of 50 people, so we are still pretty close. I think a bunch of us are here for the reunion even now.
Damn cool, damn cool. This is your 15th year reunion.
15th
right?
year, yeah.
Congratulations. So what was the politics thing you mentioned? And also like, what were your friends standing for? How does it work?
Yeah, so I think in my wing, which is like there, it is funny because it didn't have the typical hostel wing, but this circle of maybe 12 rooms, we had one person standing for Khalsek, who won, Arvind, who is now at Blackstone. There's one person who was standing for this thing called co-curricular affairs, Akash Gupta, who went to then BCG and is now back in Bangalore. So these two guys stood, they won. Because we were a new hostel, there are no juniors, no seniors. All the campaigning was done by this group of like 15 people. So it's almost like you got pulled in because your friends were involved.
Right. Like a campaign manager.
Of some sort, yeah.
Nice. And of course, your sport is tennis. And I mean, the overwhelming feeling that I'm getting at the end of this conversation is that you've really tried a lot in your early student life and early career, right? Is that the advice you would give people? Because I feel like if you have to be a successful careerist or even an entrepreneur, shouldn't you start earlier and sort of stick to something and have a longer sort of play at it?
I think if you know exactly what you want to do, I think that is correct, right? And I have met people like that. I think there are folks who come in saying, I want to do something around vehicles. They've gone built a company around vehicles or gone done stuff. I know people who have come in saying, I want to be a professor in these universities in the US, and they've made it. So they were somehow remarkably clear, maybe when they entered. I was quite unclear. I was not like really sure of why I was here, apart from saying it's a great place to have a bunch of high caliber people around you. It had good jobs. You could apply and get into the best universities. Beyond that, I was not clear why I was here. I had not come in saying I really loved this part of engineering and so on. So for me, it was a lot around saying, let me find out what I want to do. And funnily enough, I didn't find it even in the end of 4 years. So I ended up at McKinsey saying, maybe I have 2 more years to go find what I wanted to do. And that's probably when I felt like, okay, when I entered Sequoia is when I felt that, okay, maybe this kind of investing around technology and maybe some other stuff is something I like to do, right? I think that's maybe when I felt like I identified it. So for me, it took a lot of time. There are people who come in and they're very, very clear early on. And if that is the case, then they should get started very early on.
Yeah. I guess that's true for most people coming into IITs, right? Because what do you know at class 12 level?
Exactly. And I think the way you come into IIT is not necessarily with some engineering type exam, right? You're just you're good at physics, you're good at math, you're asked to write an exam, you're through.
Yeah. Okay, this was a great conversation. Thank you so much. And again, thank you so much for sharing. Is any last thoughts?
For who? For students coming in?
For students coming in.
I mean, my advice would be saying until you find your calling, this is a great place to go try whatever you want. I think there's been like some kind of there have been famous musicians who have come out of here. I think a few batches ahead of me, maybe in your batch, there's a cinematographer who came out of IIT.
Correct.
So you kind of find like all kinds of people who emerge out of here.
Sandeep, right.
Yeah. So I mean, my advice would be saying you have a free 4 years to go do whatever you like.
Yeah.
In whatever you like, there are probably people better than you on campus who will teach you how to do it. So go explore whatever you want to and find your calling.
Nice. It's a great place to stop. Thank you, Kaushik.
Thanks, Anand.
Okay, that's it for today. Very short episode because Kaushik is very articulate and he has the answers ready for everything. I feel a little jealous because I'm not that kind of person. If you're watching this and you like this video, please like, share, subscribe, leave a comment, follow Kaushik on LinkedIn or wherever he's available. And Join us next time. Thank you.